right, welcome everyone. Welcome to another episode of the 5ers Live Trading Room, and what a session we have today. Very excited about this one. How are you doing, Victor? Welcome,
I'm
everyone.
doing fine. Thank you for asking. How is everyone doing listening right now? We have indeed an exciting week ahead of us, and a stream for that matter. I'm excited. Are you?
Yes. Very excited, and hope you guys are excited as well, because we got Saul, the CEO of the 5ers, going to show us how to get rich in trading. Finally. Welcome, Saul.
How are you guys?
How are you doing?
Glad to be here. Fine, we're fine. It's fine. We just moved.
I think you might have the wrong microphone activated, because it sounds like you're speaking way far away from the. Maybe you have the webcam or the laptop or something activated. Well, he's very good at scalping, but not very good when it comes to microphones.
How's now?
Yes, perfect.
Much better. That's much better. Beautiful. Nice. So yeah, we got some nice volatility today in the market, and we do have some news coming up in 30 minutes as well. We got, if I'm not mistaken, we got the PPI, which is obviously, considering the situation that we have right now with the beginning of the month, we had U.S. recession fears with the job numbers, and we had the USD JPY carry trade unwinding, seeing the Yen pairs absolutely flying, and some expected change in monetary policies there. So we do have environment right now in the markets where there's potentially a lot of potential for a lot of volatility, and that's what we thrive on as traders. We need prices to move. Without prices moving, we're not able to make any money. So Saul, I think is there a situation like this? Are you taking the news events into consideration here? How are you planning with the current environment and with the upcoming PPI news release here?
To be honest, I'm just looking forward for those events just to bring volatility into the markets. I just feel the market prior to the events tends to shrinken, and there's not a lot to do. And after the event, potentially there will be more volatility and more trading opportunities. Other than that, I don't think these events, specifically these events, will create any kind of a new trend initiation or something like that. And I think everything's already priced in. So just for the volatility spike, that will be productive.
Yeah, no, it's going to be very interesting to see here. So are you in any positions right now? Are you looking to enter anything?
Yeah, not at the moment, but I'm looking at, I'm just doing my analysis. I'm looking at the dollar yen and dollar franc both, but I think dollar yen will be my go-to today.
Nice. Is it okay if I can pull up your screen and we can take a look?
Yeah, absolutely. So, last week with Victor, we were marking these levels, and one of the levels, the one from our 1 hour chart, it's still here from last week, and I said I would be waiting for price to come into this level and then to try to get a reaction of it. And I like the fact that as we're getting closer to that level, we are weakening, okay, or we're not increasing we're decreasing in volatility, decreasing in volume as we approach that level. So this is one of my the setups I like the most, the fact that we're kind of shrinking in this shrinking right here, and potentially to see the continuation lower. So I don't know if we haven't broken that resistance, so maybe my level is bit off, and maybe the level is actually wider. But if we continue with that slow movement, that compression towards the selling area, I'll be looking for selling opportunities. Now, the only thing I need right now is a little bit more of volatility to actually initiate that movement, which potentially is going to be one of the news announcements today.
What happens if the price breaks out here? So we're looking at the 1 hour right here, and we got.
Yep.
I mean, what you said here with that zone maybe being a bit. I don't think the zone is supposed to be bigger. I really like what I'm seeing there. But the problem I would have with this is if price breaks out and hits that level,
yep.
and would then initiate a sell, wouldn't the breakout area become, support? Wouldn't that create some troubles shorting into that move? So if you have a breakout, you want to short that, right?
If we break this level, you mean?
Yeah.
You mean we will break this and potentially this resistance is going to become a support? That's what you mean?
Exactly. So if we break out and we hit that red rectangle that you've marked out, I mean, to me that looks like a good selling area, but then the breakout area becomes problematic.
A support, yeah. Look, it all depends on how is the breakout going to happen. Because if it breaks very, very weak, in a weak way, so this resistance would not really work as a support in the future. If it breaks strongly, then potentially it will also take, and break through this area, the selling area, and my whole setup will be invalidated. So I'm looking for this resistance to either hold or break, but in a weak way, okay, in a very slow way. So we don't create a new demand area here. I don't want to see this kind of candle. I just want to see little candles going towards the selling area.
That makes a lot of sense. Maybe even have a wick up into that area on the 1 hour. I think that would be
the wick way would be ideal.
Yeah.
And which have news coming up.
Yeah, the news might be the trigger. Now, a very similar pattern it's on the franc, and if you see already on the dailies or the hourlies, we see the week. We already tested the selling area, the supply area, and we had that week and the reaction. So I'm looking for something similar to what's on the franc already triggered, some kind of this reaction, but on the dollar yen.
I want you guys to just, people watching this, I just want to take a moment here and recognize the fact that there's no indicator on the chart here. Okay, so a lot of new traders, they think that the more market analysis I do, the more indicators that I have on the chart, the more profitable I will be. And here we have Saul, the CEO of the 5ers, having no indicators, which that should tell you something. It should tell you something that the indicators are usually based on price action. Okay, so if you learn to decipher price action and market structure, you don't really need any of those, holy grail advanced indicators to help you with trading. It's really, this is really the most simplest approach to technical analysis, and it's surprisingly effective. It's looking at supply and demand, and there's this universal rule in technical analysis. A level that has been acting as resistance will most likely act as resistance until proven otherwise. And trading with that principle is just so simple. And I like the fact that your levels is just very clean, your chart is clean, and you know exactly what you want to see when you see it. And that's the true nature of discretionary day trading, which, if I might add, is the most difficult way of trading. There's many different ways of trading, but what you're seeing here is I can't do it. It's way too stressful. This is not the way I'm trading. And I think Saul, you've mentioned this as well. It's you don't recommend starting out trying to trade this way, especially not when you're on the 1 minute chart.
Yeah, that's the thing. I do recommend trying to get used with levels and your eyes, identifying these strong supply and demand areas, to buying or selling areas. But you can apply this technique to all the time frames. So what tends to make or become this challenging is going to the 1 minute chart and trying to apply that on the 1 minute chart, which, I hear what you say, which is, it's very fast and might be stressful, and there's a lot of decision-making processes, happening every minute. But I would definitely recommend going to larger time frames and trying to understand the market the same way or in a similar way of where the big money initiated a fundamental move in the market.
Yeah, I've ever since started having these live streams when I had you on and you showed your strategy and the way you're trading. I've tried to, like, I got very interested in the the discretionary approach, and I tried to take bits and pieces of information from everyone that comes onto the live trading room. And what I took from you is the idea that when you talk about scalping, you're not talking about, like, when I talk about scalping, I say, yeah, you're trading on 1 minute. If you're trading on 1 minute, then you're a scalper. But you define scalping as from one level to the next immediate level, whatever time frame you're on, it's just that level, and that level is visible on the lower time frame. So the way I've applied that is I'm looking at my high time frame levels, and when price hits the high time frame level, I'm looking for an entry, but I'm only looking for that move to take me to the next immediate first trouble area, or the next immediate level. And I've had such insane success with that. Like, it's been so successful applying that. I've just closed my 9th trade winner in a row. I'm about to close my 10th winner in a row, and I have a win rate for the last 2 months of closer to 80%, which is way different to what I did before when I had like 50%. So applying this very simple approach can be super helpful.
Yeah, absolutely. And the ratios or the statistics you're mentioning is worth highlighting the fact that this will allow you to get a very high win rate. You just need to take care of the risk-reward ratio, and then you will be in good shape. But yeah, by nature, scalping will tend to give you more wins, or multiple wins that will compensate for the size of your wins.
Yeah, and that's the thing, right? My average win rate is half an hour on the winners, which means I have to have 2 winners for every loser. So now I'm just sitting here like, okay, I haven't had a losing trade in 4 weeks. When's the losing streak coming along? Which is it's scary, because I know that 2 losers in a row, well, that means I give back 4 winners, which is I'm not used
scary
to that, so yeah, it's very scary. But I think psychologically, it's much easier for me to handle higher win rate low R than low win rate and high R.
I'm with you. I know as soon as I clicking the button and taking multiple wins, I'll be in the green side.
Yeah, exactly. And looking at the statistics, that you'll have winning streaks after winning streaks, and that kind of, to me, that creates a lot of confidence. And I know I've tested a lot of this approach on a lot of different pairs, and my max drawdown is like 3 or 4 R, which is very, very low. So yeah, I think it's a really beautiful approach, really.
Yeah, and sometimes you will have the losing session, the losing trade, the losing day, and it might take another day or 2 days to recover that loss. But those losing days won't happen very often,
which is a very good thing for your psychology.
Yeah.
So I'm watching. I'm actually watching the same chart here, and I got the same level on here on the 1 minute, and I quite like that zone above. The problem I'm having with now we're on the we looked at the 1 minute. The problem I'm having here is, like, when the news comes out, it can be so volatile that it absolutely destroys the market structure in the 1 minute.
Absolutely.
So I want to make sure that the level also visible on the 5 minute, and I think you're doing the same as well. So you're looking at the 1 minute, but you can also take a trade based on the 5 minute if the 5 minute gives you a signal, right?
Yeah. So basically, I'll walk you through my thinking process. So I have my level, I have my bias from the dailies and the hours. I know as long as we're below this selling area, right? As long as we're below that level, I know I want to be ideally shorting. And now I'm looking for a setup. So I'm looking for levels or selling areas on the lower time frames. But I am keeping an eye open to the fact that we have news in 15 minutes. But because if I engage now with a trade, I need to be sure I can close it before the news hits. Because as you mentioned, the news might be the trigger to a movement that might potentially break the resistance on the hourlies and potentially break this area. So I prefer to be flat by when the news comes.
I'm really liking that level. I've added the fibs as well. You have really good confidence with fib levels in that area as well. And looking at the 5 minutes, kind of like a break and retest. You see a clear downtrend. Yeah.
The fib it's kind of it's a good. You started with the indicators. I think with some tools and indicators is with practice, kind of your eyes will tell you the same things. I guess.
Yeah.
If I put a fib from here to here, I'm guessing this is kind of the 50%. This area is around the 50% roughly. So what the fib is telling you, it's you can see it with your eyes after some practice.
Yeah, definitely. And honestly, the only reason why I'm adding fibs on these live streams are just to visually show people that here's the 0.6 minute and here's the 50, because like I'm absolutely with you. Like I've been adding this fib on, hundreds of times daily, for the last couple of years. So now it's like, I know. I'm at the point where I don't even have to add the levels. I know where there's a level. I know where the fib is. Those sort of things. I think that of course is also it shows you that if you want to become a discretionary trader, if you want to be trading pure price action from a discretionary point of view, you simply need to put in a lot of time. You need to put in a lot of time and understand price action. I don't think you can. It's going to be very difficult to begin trading from a discretionary point of view because you have nothing to be discretionary about,
Absolutely.
Yeah. So, that's so true. I think when I don't know, that's how I see it. You become or you go discretionary when you have some reference points, some structure reference, which might be based on other things like a specific strategy, right? A mechanical strategy, but you start to deviate from it, and just at a certain moment, it's no longer that mechanical system, but you're actually calling the shots. But it's based on the same concept that you were trying to catch with that mechanical system. So you got to have something to base it upon, and doing it with the naked eye is basically, since price, the indicator, they should show price, or they show price. It's just another way to read into it. It's basically, if you're using indicator, you're using those extra wheels when you're learning to ride a bike, or when you're crutches when you walk, right? And at a certain moment you can do the same without those helps, those indicators, right? Because you see it and you recognize it because you've seen it so many times.
Absolutely. So guys, I'm on a waiting game. I don't know if you want to share your screens, guys, because I'm really waiting for price, either for the news or the price to come to this area and see the behavior, and then
I have a couple of questions which are follow-up questions from our last sessions you were on. We discussed how you start with the daily, and you look for your bias, and you put in the daily levels, and then you go to the hourly, and then you break down, you look for all the levels as well, which are visible on the hourly, and you look for an area where, if I understood you correctly, an area where it makes sense on the hourly to enter, which is also in line with the daily. You try to go with a daily bias. And we got to the place where you are at the place of interest. And the questions I have is, what exactly do you want to see? I think we started talking about this, and you said about I call them deceleration. You said compression, I think you mentioned, where it's slowing down. And weakness, I think you said weakness. We want to see weakness. So what is weakness for you, for someone who is watching at home? How do they recognize weakness? What do they need to see to know, okay, this is weakness, when they see it?
Yeah, that's a good question. So you're right. We've been talking about this level on the hourlies, and ideally, now when I go to lower time frames, I still have that level up there. Okay, we're close to that level. But now I want to see on the 5-minute chart a setup. Okay, the trigger or the reason to sell at that level. And so that can be a lot of setups. There can be chart patterns, or there can be changing in volatility, or there can be a lot of things. One of my favorite setups is actually seeing what you just mentioned, the weakness or the compression, which is actually, if you start kind of training your eyes, you can see the difference between strong movements and weak movements. Okay, we can see. Let's try to find an example. So we have strong movement. Okay, we can see bars increasing in size, increasing in momentum, and a movement to the upside can also be weak movement, something like that. Okay, something like that, which you don't see these strong movements to the strong candles to this case to the upside. So both this movement and this movement, they're both to the upside, but this is a strong movement to the upside. You see the acceleration, and this is a weak movement to the upside. You see little candles instead of large candles, and momentum and speed. So what I want to see is, going back to our example, at this point right here, we had a strong movement to the downside. Okay, to create that movement in the Forex market, you need a lot of money behind to create it, right? So last time price was at this level, there was a lot of interest to push this market in a very aggressive way to the downside. So now I want to see the market going again to that same level in a weak way, which is what we're seeing right here. We see little candles, we see small candles, and what my premise, or what I'm expecting to happen, is for the big money that in the past caused this movement to have the same interest to do it one more time, to do it again. So as long as we continue in this week, okay, little candles, or the compression is deceleration, compression is kind of the same, to that level, I'll be sometimes without any confirmation, just selling, because I'm just anticipating that this movement that happened once will happen one more time.
Great. So, and you mentioned actually what I was going to ask you for the follow-up question would be, you wait for your setup, and you have multiple setups, and that can be chart patterns you mentioned, but also the loss of momentum or weakness or compression. So, and I was going to ask you, what is the trigger? What tells you right now is the moment to enter, and not in half an hour or whatever time? And you mentioned that sometimes you don't need a trigger, you just enter based on the levels.
Mm-hmm.
But do you have a trigger you commonly use, and what is it, if you don't mind?
Yeah, so there's multiple ones. Okay, it's a hard answer, but if the setup is the compression, okay, these little candles going towards that level, I might get into with a sell limit order. Okay, I might not even wait for any kind of confirmation, because sometimes the reaction is so strong that if you're waiting for any kind of confirmation, you just miss the movement. So if the setup is this, okay, and this behavior continues all the way to that level, I just want to get in, and I'll measure my entry and my exit, and I'll adjust my lot size to not be overexposed, and I don't want to see any kind of confirmation, because many times the reaction is very, very strong. If on the opposite hand, for example, now in 5 minutes we have news, and suddenly from out of the blue we have a strong candle to the upside, like a candle like this one, okay, very strong candle to the upside, going to my selling area, then I want to wait for confirmation. Now, an example of confirmation might be what is called a Quasimodo, for example, where we have a pivot point. Maybe I can draw it. Okay, so we have a very strong movement to the upside, And then I want to see something like that, a pivot, and then, which is similar to a head and shoulders, something like that. Okay, something like that. So I want to see if I zoom in. Okay, this movement bring a strong reaction of the from the selling area. Okay, so I had the this. So I had the strong movement to the upside. I had a strong movement to the downside, and then the break of this level, for example. It's just an example, which is similar to a head and shoulders or something like that. So those kind of confirmations, the breaking of key levels within the selling area are also kind of confirmations I might be looking for.
I see. And you mentioned you keep on watching the momentum, because if the candle is very bullish, you want to wait, right? You want to wait. You want to wait for some kind of indication that it is that's all it's going to go up, and now it's starting to break down again.
Correct. Another kind of confirmation would be, the strong movement to the upside and then consolidation. Okay, if I have consolidation, that kind of tells me, okay, it's not following through. So if I have consolidation and slowing momentum, then I might, at the break of the consolidation, I might join the movement to the downside.
Great stuff. So great stuff. Yep. Another question that I think our audience would like to know. Let's say you look at this on the 5 minute, just the way we were looking at it before.
Yeah.
And you're interested in entering that rectangle we have above us. Where would you invalidate this setup or this area that you need to get out because the setup is not going to work out?
Yeah.
What level will be the invalidation level for you?
Okay. This is sorry. Yeah. So this is like an anticipated setup. Okay, because I'm not. The level from the hourly is up there. We're not there, and yet we want to make money right now, right? We want to trade now. So I look for similar setup selling areas in lower time frame. So I go to the 5-minute chart, and we have one selling area here, and we have, based on the 1-minute chart, we have another selling area there, and potentially we have the extreme level, which is up there. So I have two options. I have option number one to approaching this selling area as one setup, or only as part of a multiple entries I'm going to be taking. So if I'm going to go very, very small at my first entry area, and then knowing that if it goes against me, I might add to my position here and here, then my whole setup gets invalidated there. Now, if in the other hand, I'm saying, okay, the distance between this selling area and my next selling area, which is there, it's a large one. I wanna approach this rectangle as a setup itself. Then I need to take losses once we break above that selling area, reset, and depending on how the market approaches the next selling areas, then I might sell again, but with a fresh setup at the top.
All right, here we go.
We have news indeed.
Yeah, looks like we got some. Well, that is that's what we call volatility.
Yeah, I like that volatility. I just want to see that there's going to be now I want to see if there's going to be a follow through from the break.
Yeah, make sure, guys, that if you're on the high stakes account, you're not allowed to be trading there in this time. You need to wait. Is it 2 minutes before and 2 minutes after, if I'm not completely mistaken? So it's a 4 minute window if you're on the high stakes account. But I think also that's generally a good rule, because this very time right now is even if you're on the high stakes account or not, now it's not the best time to enter orders. Usually what I want to see is I want to if I'm swing trading, I usually wait like 30 minutes. Then if I'm scalping, looking at low time frames, I want to see some type of structure being formed based on the news move. So here, for example, we could move back up and start testing the areas where we broke down. Just a lower high is what I would want to see if we were going to short. But it looks like I'm currently in a swing long on NZD/JPY, which I mean, it's funny because I'm watching the 4-hour chart here on my setup, and you're watching the 1 minute, and the volatility is not visible on my chart, which tells us that it's not a huge move. It's not really it's not one of those moves where it completely destroys any swing trading setup. Sometimes sometimes with NFP we see 4-hour candles that are just the most craziest candles ever. So I think for me that shows that the I mean, I haven't looked at the numbers, but most likely the news are not that unexpected. Otherwise we would have seen much bigger moves. I would say I might be completely wrong. Would see the forecast. Got US PPI or PPI year to year.
It's below the expectation, so it's a worse
lower
PPI,
than
which is yep.
Now this the news itself created a new supply area, a new valid selling area. So depending on how we retrace towards that level, that's also a potential good setup to sell. So let's see the price action.
I think you eliminated the rectangle before. Is that correct?
Because I think I had it here, and the news was kind of the consumption of the previous supply area. So if we're going to break now this level, most likely we're going to break also this level.
I understand.
So kind of this movement was the consumption of the previous one.
Yeah, and that move to the downside based on that news also creates a whole new structure. Now, when you look at this now, it's very clear where the resistance was. So
exactly.
To use the level above is oh, look at that, we got a trade. Is that a sell?
Yeah, that's a sell.
Okay, so I don't feel great being trading against you today, but we'll see. We'll see what happens. I'm rooting for you at the same time. I'm rooting it for you. I'm kind of hoping that you're gonna have to close this. This is very interesting. I like the fact that you saw that wick, you saw that like pin bar ish candle, and then you're like, yeah, we got selling. I'm getting it. Did you take profit right away?
Yes.
Yeah,
that was like.
I barely even saw you opening up a position.
That was a 7 pip scalp.
Wow.
Yes,
Nice.
and it's I think it's beautiful, Saul, because what we just did there is, to me, right, in my framework of how I think, that's the market going to retest that order block that just left there. That's an outside bar in my definition. Yes, exactly. That's the outside bar that market comes back to retest and then either moves out or not. But that's a very common area for me to be looking for a long, and I know that. I know that market will likely come back and retest them a lot of the time. So you getting in on that move, going into that area, and I would be waiting for that price to come back and then move out. In this case, I wouldn't be doing it because the first movement, initial movement, is to the downside. So I want to be with that movement. But I mean, the idea is the same.
But that's why and that's a good point, because I'm also anticipating a reaction like that from your order block, and that's why my target was at that level. If my target was below, I would be in the trade. So I don't want to ask the market. This order block is the very next level. That we say is my very next level available. So I don't want the market to work hard for me in order to give me profits. So that's why
that's really well said. I think that's something yeah, I think that's something, the audience needs to remember. Like I think also, Saul, you talked a lot about when you were on another time, you talked about how you're just asking for a small move, and you're not asking for the market to, like you said, now work a lot for you. You're just letting the market do whatever it's doing, and kind of like just asking for a small favor, like, could you just please give me this little bit of pips, and not that huge move? Because the market, it's like if you ask the market for just one small move, it's likely it's going to give you that small move. But if you like, if you ask it for a huge move, it's very unlikely that you're going to get it. So sure. I do really like that approach. But I'm really liking what I'm seeing right here. But what I want to see here is I want to see like a reclaim of the level created now from the news event. If we get that would be really awesome for my trade. But I'm now also starting to think that that's a great shorting opportunity on low time frames.
Yeah. Now, why didn't I didn't market sold that? Because that was a strong bar to the upside. Okay, so if we had like small bars going to this selling area, I would be selling market. But it's what we just explained, before, the fact that we had a strong candle to the upside. I want to wait and read price action and wait for confirmation. So we see the reaction to the downside, which I like. Now, as long as we don't break this level, I'll feel comfortable, shorting the market. That's why I didn't. I hope it's clear. That's why I didn't, pull the trigger.
So when you get a strong move, you want to. Yeah, you want to get a strong move. You want to make sure that move is kind of like calming down before.
And to that point, where you entered, we now see a pin bar. Was that any consideration when you saw that pin bar? Did you think, okay, that's one of the signs that I could use, that I know price will likely go to that, what I called order block, that area below? So did you use that in your rationale?
Yeah, I did, because the pin bar is, it's showing me the rejection. So if it was also the way how the pin bar is formed, if of course we're on a 1 minute chart, so we would have to go to the tick chart to see how it's formed. But the fact that the pin bar was formed in the last seconds of it, okay, this is going to be advanced. Doesn't matter. The fact that the pin bar, we see the rejection, so I'm anticipating a follow through after the pin bar. So that's why I pulled the trigger.
I recognize that. So I use that too. How the market behaves right before it closes or right after it closes a bar, right? Yeah. Because I don't know what the reason is, but I think there is a actually reason behind it. There is that behavior that it rejects it right before, it fakes making a bullish bar, but 5 seconds or 3 seconds before that bar closes, everyone who thought that was going to be closed as a bullish bar, and then it it rejects it and closes much lower and trapping everyone in. I see that a lot, and to me, that's a sign too that I use a lot in reading, what the market is trying to do.
Yeah.
So I relate to that.
The thing is, the pin bar, we know that it, opened here, went up, and closed at the same price, right? But what happened in between? Because the same pin bar could have been formed like this. That's ugly. I need to go to a drawing tool. But what I mean is, could have gone on a weak way to the upside and close, and close to the closing time, going sharply to the downside, which is bearish, or could have done the opposite, could have gone that way and then slowly to the downside, all the way to the top, to the bottom, and that's also a pin bar. But in this case, it's not a very strong selling signal.
And actually that price action that you drew, one is more bullish than the other one. The latter one is kind of bullish because the impulse is to the upside.
Correct. So that first reaction, that's a, that creates what we're discussing here at the demand area. So now it's going on a weak way towards the buying area. So it doesn't matter that it is a pin bar. It opened here, went up, closed here. It is a pin bar, but it's a kind of a bullish pin bar, if you will.
I understand.
So you're saying like it's almost like a bullish bearish pin bar because the price action before the pin bar, that makes a lot of sense. I actually never thought about that, but that makes a lot of sense. If you have very bullish price action prior to creating a bearish pin bar, you have to be careful because it's still bullish price action.
Yeah.
That's the granular information that we miss when we go higher time frame. The higher time frame, of course, will give us good overview of what's happening, but the story within one bar is also another, relevant story to interpret that bar better. I'm fascinated what you're showing. So great stuff.
I would say. Did you miss the move? Did we? Well, I guess we, because now when you're looking at this, are you thinking that you missed a move or?
I'm not concerned about it, but I kind of did. After this reaction, or even when it was going, in this bullish candle, that was a good opportunity to sell. But that doesn't mean I lost the opportunity because now I have my anticipation is that as long as we continue below now this level, if we touch that again, I can sell again. So I'm not concerned about missing the place. Also, and in these training sessions where we're doing so many things at the same time, it's kind of hard to react fastly. But usually when I'm on my own, I'm way more active and more.
I'm definitely with you. Sometimes when when we're having these live trading, when we're just in trades, I sometimes I tell Victor like, are you going to talk now because I have to manage this trade and like you have to be focused, and sometimes you just have to be quiet and focus on price action. And so I definitely understand that joining the trading room and trading live adds another layer of distraction basically when you're in a trade, and also when you're trying to explain what you're doing while doing it, because sometimes when you're trading discretionary, you're trading a little bit based on intuition, and when you're getting those first impulses of intuitive information, you can't really put that into words. You have to think, and you have to actively take that information out. Sometimes it's very difficult to you can enter here and then what you get questions like, why did it enter here? Well, I'm not sure, I'm not sure, but I like this, and then you have to think about it,
Absolutely.
So it's but let me. I want to share quickly if while we wait for USD/JPY to do something here, I want to quickly share a trade that I'm looking at. So I got two trades. So like I said, I'm looking at NZD/JPY here, and I want to show you guys the overall structure that I'm looking at. So this to me tells us that we've had an overreaction. So this is the when we had that massive move to the downside. This is on the weekly, and I believe that this was just a massive overreaction, or whatever you want to call it. But you haven't moved down into a bigger supply area here. I think it's also visible on the monthly, right? So it's a big support area down there, and we have a big wick on that weekly candle going down to the daily. I'm seeing like this type of price action here with that strong bullish candle on the daily, and what I saw on the 4 hour is exactly what we saw on the on USD/JPY, but you looked at the 1 hour and we saw like this type of structure right here. And the whole idea is basically based on trading this trend with the break and retest of that upper resistance for a move up to this region right here. So what I'm doing here is I have a fairly wide stop loss. Actually, this is not as wide as I usually have it, but I have the stop loss like below this area where I believe that the trend is invalidated, and I'm going to TP at the somewhere around this area where hopefully I can let the trade run for 1 hour. But I'm also happy with just exiting here for 0.6 or 0.7 if there's a clear rejection on the lower time frames. So that's the trade I'm currently in. And if this trade hits TP, that would be my 10th winner in a row. Just closed AUD CAD and EuroCAD. And this trade, also a break and a retest of a support area here. You can see the daily bullish engulfing candle right there. Well, maybe it's not. It's actually outside bar right there, the daily candle. And then on the 4 hour, we have this area right here. So I decided to get in on the retest of that area, and then just a quick exit at this level right here. So making sure that I get in at a good level, have a very wide stop loss to make sure that sometimes I can even exit this trade for way lower than 1 hour, and make sure that I'm taking profits on the first initial move. As you can see here, I believe that this was the first initial move, and now we came up into resistance. So not exactly the same way as you're trading, but by applying the same idea on the lower time frames, I'm going from one level to the next immediate level above. And you can even go into lower time frames here, and you can see that you have, if I remove everything here, you'll see that there was a level here. You can look at previous price action from this area. There's a level here, and then price comes up and starts testing the level above right here. So it's kind of like price comes down, and this is on the 15-minute, but I'm applying the higher time frames to look at the level. So similar to your idea, but as with everything else, personal touch on it.
Amazing.
Yeah, I think that concept is you can use it in different ways, different time frames combinations, and that's what you're doing. And I think it's versatile. It's not fixed onto some trade plan. You can use it all around, and I think it's a great place because you get your result right away. You're going to be right, and it's going to go to that area right away, or relatively right away, or not, and that's good. We have a question, so for in the audience, someone mentioned about the scalping this way, really quickly in and out. How long can you hold this concentration? Because of course it needs razor sharp concentration, right? You can't be talking on the phone and thinking I'm going to catch this. You got to really focus there. How do you handle that, and how long can you be operating on this level?
Yeah, usually I try to not go over 2 hours of the session, and I don't need really, as long as I'm not in with a trade open, I don't need to be 100% focused. So I can walk and I can go for coffee, some snacks, to the toilet, whatever it is. I just need to be very, very focused while I'm managing the trade, and usually between 1 hour, max 2, and that's it. Because otherwise, the whole session, yeah.
Okay.
That which tends to be enough, because in that session you get enough setups on the 1 minute chart to make your income. So you don't need to go above that. Above that, you get tired, you get you lose focus and concentration, and you don't want to be there.
Nice. So basically, 1 hour, not more than 2. That's for you. That's the sweet spot where you still are operating, and you're sharp. You're sharp, exactly, and not missing things.
Yeah.
Nice.
Yeah, that's one of the reasons why my market scanning, it's always in the morning. So it's one of the first things I do when I come to the office is trading session, and the market scanning. So every morning I have 30 minutes of market scanning, and almost all my trades are placed in the first 30 minutes. So at around like 9:30 in the morning, like 30 minutes after the London Open. And man, I like when you have that routine. And I feel like it might be the same when you're scalping and you got like a 2-hour session a day or a 1-hour session. If you make enough money and you're happy with what you got in the first 15 minutes, it's like, yeah, you can go about your day, you can do something else. And I know that we're all busy, we have a lot of stuff going on, so very happy if you can make that money in the first 15 minutes, right? But I think trading doesn't have to be more complicated than that. It's like you have your levels marked out, you know exactly what you're looking for, and just wait for the setups to appear. And I feel like a lot of people they're spending too much time trading, trading too much, looking at too many charts and looking at too many setups. You're spending too much time. I think it's like we're in this mindset that the more you work, the more money you're going to make, right? Which is true in almost everything else but trading,
Trading many times, doing nothing is the best you can do for your trading.
Exactly. So it's like in trading, the more you trade, the less money you make,
Yeah,
but,
absolutely.
So yeah, it's a very interesting dynamic right there. All right, let's see what we got right here. I'm also interested to see where USDJPY is going.
Now that you mentioned 1 hour, 1 to 2 hour of really sharp focusing, how many of those can you do in a day? Is it once a day and that's it, or can you have one in the morning, one in the afternoon?
Usually I do only the London session, but sometimes I can do the US session, like now, if I need, for example, to recover losses from the London session. So if I did good on the in the morning during the London session, I don't need to go and trade the US session. Usually I do 2 sessions if I'm feeling there's good volatility, good setups, I can make more on that day, or if I need to recover the loss from the morning or something like that. But usually with only the morning, one session a day tends to be enough.
Nice.
Oh my God, look at that. Look at that wick not hitting my entry. Oh my God, that is close. What's the low?
I think that's
94?
pipette.
That's 1 pipette, yeah. 1 pipette. Straight to TP. That's well, that's what you get for yeah.
You were on the other side on the ladder. Didn't get picked up.
No, wow, that's amazing. Amazing. Saul, I would like to ask you a question on, if let's say you got a new trader, been trading for maybe a year or 2 or so, and they're interested in starting an evaluation account. They have a strategy, they've tested the strategy, they're fairly confident in the strategy. How should they approach the evaluation phase? Would you approach the evaluation phase differently than when you get funded?
It's I don't have an easy answer for that, because I for me, I would like, the evaluation is an opportunity for traders to show what are they capable of doing, and for us to learning them, and afterwards assess risk properly. But I think traders see evaluations just as they're seeing the evaluation as an obstacle to get funded. They just want to bypass the evaluation somehow, or applying all kinds of techniques just to get the funded account. And then when the funded account is there, they tend to blow it, because they didn't apply or they didn't show them, didn't try to take seriously enough the evaluation and the risk parameters in there as an opportunity to build their skills in order to be ready to manage a funded account. So I would my advice would be for traders to really take seriously the evaluations. You know, that the risk parameters in the evaluations are there to help you afterwards manage properly the funded account. So don't rush it. You know, tune your risk and your strategy to the risk parameters that are in place, and that's it. You know, take it slowly, take it, you know, with the seriously, and then you will not get that funded account effect of you not knowing how to manage the funded account or something like that, and you will be able to manage it properly afterwards.
Yeah, I think that's very well said. I think a lot of people think that, you know, like if you're trading the evaluation to get, you know, to get to the funding stage as quickly as possible, you're trading a different system. You're trading a different approach than what you would be trading when you actually do get funded. And, you know, you have to kind of like, you have to understand that that's giving you completely different statistics, different win rate, different risk reward, and different effect on your mentality. So I do think there, you know, I think you have to have just the same approach in evaluation as in funding. And if it takes you, you know, 6 months to get to target, well, then it takes you 6 months to get to target because that's your trading style. But then when you get that funded account and you get to target, you'll be able to scale up and eventually with that slow and steady approach. I think that's where the success is, because I've seen so many traders, they pass an evaluation in a couple of weeks and they're super happy and they get one payout and then they completely blew that account, or they never even get a payout. So from what I've seen from all the interviews, what I did and everything, the ones that have multiple payouts, those are the ones that move slowly. They move slowly and they just take whatever time is necessary.
Absolutely. Well said.
Yeah.
All right.
I think the you should be trading if you think, as a trader who is trying to you know, face this situation where you want to pass this quickly and to go to the funded account. If you think, no, I'm going to wait for my funded status to then use my best strategy, the reason is, why don't you use it in the evaluation account if that is the best strategy you have, right? Yeah. If you think there is another way to do it faster, then that should be the actual strategy. And the fact that you're not using that strategy means that it is not the best strategy, and you should only be using the best one, right? So you shouldn't be waiting for funded to then start trading, you know, carefully.
The strategy.
Just the actual strategy, exactly, because it doesn't make sense.
Absolutely.
Great point. All right, Saul, I think I know that we've had you for 1 hour now, and I know that you've got a lot of stuff going on. You've recently moved the office as well, the 5ers, so that's very 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 interesting to see how that all of that looks. Hopefully it's much bigger and much better office, which
it is. It is. You know, you suddenly have a lot of, you know, from one side to other one, you know, you should be walking 10,000 steps a day, something like that. So just walking side to side, you walk that, you know, half the distance.
Nice.
So, we'll create some videos and publish them. Yeah, it's very nice.
Looking forward to that. All right, guys. If you want to see Saul join the live trading room more, make sure that you do hit that like button and subscribe. We're really, you know, upping that subscribe number. We're almost at I think we're gonna get to 45K followers in not too long, and I've actually promised them a sort of giveaway at 45K, and this is the first time that you know about this, Saul. So yep, that's what we're doing. 45K, we're doing a celebration giveaway.
Fair enough.
All right, so thank you for joining. We'll do a break, and when we're back from the break, we'll be live trading, me and Victor, and we're going to be taking a look at the gold, because I know a lot of you want us to take a look at gold. Thanks again, Saul, and I'm hoping to see you in the live trading room more often going forward.
Thank you, guys. See you next time.
Yeah, thank you for all those good insights. Thank you.
Thank you. Bye-bye.
All right, welcome back, everyone. Welcome back. So we just had Saul on. Always very interesting to see how Saul is trading. Very motivational, inspirational, I should say. It should be to a lot
Yes,
of people,
indeed.
you know, seeing how simple everything can be.
Yeah, and I think that's something typically understated and undervalued. The simplicity is actually the key to success in trading. You said, and we said it many times on our stream, and you said it today again. Having more things is usually not better. More is usually not better. There
No,
is
definitely.
an optimal curve, right? If you don't do anything, of course, nothing will happen. So you have to do something, but there is an optimum at which after you pass that, it doesn't make sense to add anything. If anything, you should be, making it simpler all the time, or trying to make it as simple as possible all the time.
Okay, so I think we want to start with gold. Do you mind taking a look at gold? So maybe you can walk us through your analysis on gold, and then I'll look at gold as well, and then maybe after that we'll take a look at whatever pair you guys want us to take a look at. So we're gonna start with gold, and then let us know in the comments if you want us to look at anything else.
Sure. I will go through. I'll put on my screen, and let's look at gold for the analysis. What I do is I always start with the highest time frame, and in this time around, or this occasion, the monthly, which is the thing that I usually do. If you just look at this without adding any rules about what is the trend, what is a trend, what is a swing point, you don't need to have too much of rules to see that this is an uptrend, right? It's going higher all the time. So just with the basic naked eye, with no knowledge and experience, we can see that we are in an uptrend. But more specifically, if you go to the order block, the concepts that I use, we have formed a bullish order block. We haven't even touched it back yet, and we are, after that big bullish candle, we're still pushing higher. So that goes to say that we are currently still in a bullish impulsive move. And on the weekly, we've been talking about this for some time, where we had a accumulation of bearish structures indicating a possible, even this one, an outside bar, the possibility of price going lower. But what did price do? Didn't do that, right? That's similar to what Saul mentioned. He's expecting price to do something, but the fact that it's not doing it, that's also a sign, right? So the fact that even though the price had on the weekly time frame a lot of reasons to continue lower, it had all the reasons it needed, including an outside bar, it was unable to do that. And that is a bullish sign, right? Because the sellers were telling us all the time that they're going to go down, or at least they want to go much lower, and they don't. They are not able to do that, right? The turf is defended by the buyers, so much so that it didn't even move from that outside bar, which is this outside bar, right? Didn't even have any follow through, right? That's the word Saul used. You expect a follow through, and the fact that it's not having that follow through tells us something, right? That's tape reading. So from that moment on, price started forming bullish structures. This one, we had a retest of that order block, and price moved away impulsively. Now the question is, we gain a couple of weeks already. We are in the supply zone based on this bearish structure. But the question is, what does price do when it gets to a specific area, a relevant area, in this case, a bearish supply zone, or not bearish supply, a bearish structure, right? A supply zone. What does it do? Does it form bearish structures or bullish one? That's one indication. And what do we see? It formed a bullish structure. So that tells us already, in the place that it's supposed to go down or have some formation of bearish indication or indicators, it's doing the opposite, right? And what does it do? Same thing. It's the same pattern. it goes down one bar, goes the next bar, in bar number 2, it overcomes the first bar, which is the engulfing, which is the basis for the order block. What does it do next? It goes back to retest that area and then moves out, right? That's the simple, basic anatomic movement that I look for in the market. So it did that, and now it's showing, not printed yet because the week hasn't ended yet, but it's showing a possible weekly order block. So I should basically take that out. It hasn't closed it yet, but this is follow through, right? And if that's all bullishness, so that's something. This trade is, of course, right, the trade that I just showed is already gone, right? That trade is already gone to get that long. It's gone. Nothing to be done about that. If we go to lower time frames, what do we see? We see there was a daily order block within that weekly, where it came exactly where you would be expecting it, and then goes out. This is of course hindsight, and you're interested in what's going to happen next. Well, that's kind of difficult, because now what we know is that on the weekly, the monthly is very bullish. The weekly is getting follow through by forming bullish structures consecutively. So the most obvious thing is that it's going for those highs, right? And if you look at price action, how it's been the last couple of sessions, it made that move back to that support area based on that order block and moves away violently, right? It's very bullish. The buyers are in control, so it's only logical that's going to make a higher high. What it will do after that, that's the realm of crystal ball. I have no idea, but it's the only thing I can say is that it's going for that high to be taken out, and what we need to be seeing is, how does it break it? Does it break it impulsively? Does it break and retest and continue, right, like that? Or does it consolidate and just go sideways and perhaps even close back, right? Just taking that liquidity out and then stopping in its track. If it does that, then maybe that could be a temporary high for some time. But I doubt that. Looking at price action and everything I just mentioned on the monthly, the weekly, it seems like this has a lot more to go for it. And it doesn't. I don't talk about fundamentals because I'm a technician, but if you think about it, fundamentally there is a lot of risk out there, so it makes sense that gold is thriving on that. Going to the lower time frames, what I would say is this is the area, right, we have on the most recent buy structure, right, bullish structure. Is it going to come back there? Doesn't seem like it, looking at these huge impulsive big bars. So that's not going to happen probably. And on the lower time frames, well, you could be trading looking for that reversal, but there is a let me see, yeah, there is a structure here, a neckline based on this quasi, but it is against everything I just mentioned. So I would deem this as a low probability structure, right? It breaks that neckline and it goes to that order block, which is currently in, right? So that makes this is a counter trend trade, right? And it actually already showed us a bearish order block on the H4. So technically, I would be trading this as a short, not because of the higher time frame, but in spite of the higher time frame, knowing that it's likely that in the next couple of days it's going to take that high, but maybe not yet, right? Maybe this could be a day trade, right? Something I don't want to be holding this for very long. But the fact that right here in this order block, it is rejecting by forming to start with one order block, one bearish order block, and it hasn't been taking it back. And if we zoom a little bit deeper, we can, let me get this straight. If we zoom a little bit deeper, of course, if the tools cooperate, we have an order block here. And what does it do? Comes back to that order block, right? That's the area. That's the sweet spot, right? You have a quasi indicating a entry order block, which is this area. And then it forms that rejection that you're waiting for right? That could be one of the rejection, right? Pin bar, outside bar, engulfing, etc., or some other rejection pattern or sign that you signal that you could use. And then it comes and rejects that area, that order block that it just formed recently. To me, that looks like a great sell area. But keep in mind that, of course, the higher time frames is you're trading against the higher time frames. So this trade would be something you do not hold for very long. It is against the higher time frames. But even so, it is. If I were to go to the lower time frames, I would wait for some kind of reaction at a particular area, maybe this H1, and maybe if you look at some other areas, I don't see that. So basically, you only have the H4. The H1 hasn't been tapped into yet. So if this breaks, depending on what how you trade, but that would be the relevant area to be broken. It's not a neckline. That's why I don't mark it as such. There is no neckline all the way down here on the lower time frames. Even so, this is a great area because you have the H4, the quasi formation, and the engulfing that tells you that this is a great area to be shorting. But keep in mind, it's a counter trend trade. So if you take that, it should be something you hold for the very, very next level. As Saul said, and as Jonathan mentioned, the first trouble area, the FTA. And that's what I like to trade when I trade against the higher time frame trend, because I have at the back of my head that anytime now the trend could resume, the higher time frame could resume, and you're basically in the wrong direction, right? But it doesn't matter. For a day trade, that is still valid to be done because the price doesn't go up in a straight line, right? It goes zigzag, and it might still do this, go much, much lower, and you get your TP, while the daily, it hasn't broken any structure, right? This is the relevant structure for it to break and break the trend. So there is a lot of space for price to retrace before it continues further. And if I were to tell you where to put your TP, if you're considering something similar to this, what I see an outside bar. Is this an outside bar? Let me check. The high is 433.475, and this close is not a outside bar, but I do see an outside bar here. So basically, this is on the H4. I don't mean to say it's going to go there necessarily, but if you get a sell signal on the H4, in any case, that would be the most obvious place to be putting your TP. But I see already on the H1, you can see some other areas of interest, which depending on the time of the day, because I believe you shouldn't be holding this for very long if you even enter this trade against it, right? That you should be considering, depending on the time of the day, to just take at the first trouble area. And even this low, if it doesn't break it confidently, could be a great area to just get out, right? That low, if you got in before, or if you're selling this area just to put your TP as it is breaking that low. That would be my breakdown of gold in terms. So basically, it's very bullish on the macro higher time frames, and we probably will be continue to break these highs. But we have on the intraday, we have a little setup. We might get I didn't mention this, but there is an order block there that is being retested. If this is pushing price higher, as long as this respecting this, of course, the setup that I just mentioned is not going to work, right? So that will be the indication. That's why I mentioned as well that the TP should be could be in relation to this. If it breaks this, then obviously it's likely to go much, much lower. This is not a daily. This is I think this is 1 hour. But yeah, so this is the structure to be defended by the buyers, right? So that's the pivotal thing. If it breaks this, then we're likely to be seeing lower prices for some hours or maybe a day or two in its way up, because we think eventually it's going to go much higher.
All right.
Yes,
so that's Thank you, Victor. Very, very good. Very nice detailed analysis on gold. So I'm not going to be spending too much time on gold. Well, I'll take a quick look here, and like Victor mentioned, it's obviously very bullish on the macro, like the higher time frames here. We are seeing that we got higher highs and higher lows all over the place. Very, very good. What I want to be focused on is this, guess it's not local structure because it began in April this year, but it's what I'm interested in is this structure here. And we're currently at a resistance area is what I'm thinking. Let me make that white. Great. We are right now at the resistance area. So I wouldn't be looking for longs here unless we can push above this area. If we push above this area, then of course, of course I would long this. Shorting a move like this, I always try to take the overall higher timeframes into consideration when trading, and I think it's important to understand that if you're shorting gold here, even though it is at high time frame resistance, I still feel like you probably don't want to short a massive uptrend for the same reason as I'm not interested in shorting Bitcoin. And we're going to look at Bitcoin after this, and then after Bitcoin, we'll look at Euro USD. But there is a case to be made here. I want to add this level right here. And then I'm going to go into the 4 hour. And what we're seeing here on the 4 hour is pretty clean structure here and a good level where if traded to the downside, we might see a market structure break. And that will look something like this, And if shorting that area, then that daily level becomes a possible target. I know Victor is looking for a move down here, and I think that's also quite likely. But as you guys know, I want to exit the trade. I wouldn't say as early as possible, but definitely quite early. So looking at gold, if I would short this, I would wait for a break lower, and this would be my trade, a 0.78 hour trade, and it probably would be quite visible on the 1 hour. Then also on the 1 hour, you can see that on that low, on that wick, we have an area here. I'm going to pull TP, down to that level, getting a bit higher risk to reward. We can also limit the stop loss to the local high right there, getting a much higher risk to reward. I think that's a setup that I would be willing to take, perhaps, if it activates. I'm not going to take the trade though, because I don't want to be trading gold, especially not when I feel like the loser is just around the corner. And if I'm trading gold, I'm certain that loser is going to be on gold. I've been burned so many times on gold. It's so unpredictable for me. And these weeks all over the place is very, very problematic for me. Interesting note, I'm just getting some alerts on EuroCAD. You remember that EuroCAD trade I closed? That's quite an impressive move right there. So I've actually seen this happen quite a lot of times when you have this strong move up to a level where I first place my TP, and I'm starting to get quite a good number of trades into my journal. So I will start tracking this, how many of the trades actually start running to a higher TP, and would it be more profitable to hold those trades. So that's something for perhaps next week. We'll see about that. So gold, let's quickly go back to gold. So that's a possible short that I would be taking. if I were looking for a trade on gold, it's just, you know, simple. It's from one level to the next level below. And that's basically it. But again, I mean, it's a massive uptrend. I'm not sure if I want to short this. You know, it's a massive move, and it looks very strong.
Bullish.
Yeah, very bullish. So not interested in shorting this. I could, however, like I would most definitely go long when there's like a break and retest of this area. If we have something like a daily close above, maybe daily open and close above, and then a nice bullish reaction in this area, then absolutely I would look for longs on gold. Okay, so just let's take a quick look at Bitcoin. So first of all, looking at the higher time frames for Bitcoin here, adding the Bitcoin logarithmic regression indicator, we see that we're still well inside the green zone right here. MVRVC score has not really broken down. This is the only chart I care about when it comes to my long-term positions on Bitcoin, and there's not really anything to be worried about. That's on the weekly. This is on the daily, and I'm not overly worried. Although the local structure does look rather bearish. If you look at the daily, I mean, you look at this downward trending channel right here. But again, if you then zoom out, look at the weekly, this is the reason why I would not be interested in a short on Bitcoin. Then if you look at more pure price action chart, we can go to Bitcoin here, and we can look at the fact that big drop that we had right there came down into the high time frame long RLZ or RLC or RLZ, whatever you want to pronounce that. Hit the 0.618 here, and then that's where down here at the 0.618, that's where my last buys are for Bitcoin. And there's actually quite a interesting trade setup here that I believe I talked about when I was on Dirk's live stream on his channel. We did have an interesting an interesting reaction right here on we had a hit of the 0.618 here, confluent with a decent resistance area. And if we go to the 4-hour, I saw that we had multiple 4-hour candles confirming a breakdown. And then I said, you know, that could be a good trade where we take it down to that level. And that would have been, like you can see, I would probably have been filled on that one. So that would have been a good short. But the reason why I'm not interested in taking shorts like this on Bitcoin is because of the fact that the higher time frames, again, you go out to the weekly, locally it's in a downtrend. It's higher lows and higher highs. Even on the weekly, it's visible. But then on the bigger picture, the macro time frame, I feel like this is an asset where there's a much bigger edge in only going long. It's like in equities and stocks. It's usually like if you're trading the S&P 500. I mean, you look at the history of the S&P 500. It's there's more edging going long than shorting this from my view of what we're seeing right here. And that's also my views on Bitcoin. Interestingly enough, we do see that is one of the most beautiful weekly pin bars I've seen on the S&P 500. Comes down, hits the reload zone, fills that reload zone perfectly, horizontal support level, and prints. Yeah, and it prints one of the most beautiful weekly engulfing. And like Alex says here in the chat as well, strong bias on US 30 as well. Yeah, that on all equities, basically on all, like it's almost like the equity markets are just designed to be a perpetual money machine of uptrending markets. It's there's definitely an edge in being a long only.
Long only.
Yeah.
Yeah.
Okay, so let's I don't think there's a lot to cover on Bitcoin really. I think if we go into the lower time frames, I guess because of the fact that was a good area for me to short, well, of course, then my next long would be simply a reclaim of this level up to perhaps this high. So this is actually the long that I'm looking at to take on Bitcoin. Let's assume that in the next 1 to 3 days we'll get a reclaim of this level. Then this is what I'm looking at. Something like this would be a trade. And yeah, and of course, unless we see a crash like in 2007 or 2008 or in 1921, 29. You know, black swan event will always come along. Crashes, economic recessions, and crashes. It's sadly, it's part of the the capitalist machine that we've built. It's just part of the whole system. Unfortunately, that there will be bad players and creating unfortunate events. On the flip side, though, if there's another housing crisis, I hope it's not, because that's going to be detrimental to a lot of people. But as an investor, it's kind of like gets me interesting, because times times where there's economic trouble, when there's blood in the streets, you want to be buying, and yeah, it's also quite frustrating, because what is like an investment opportunity of the lifetime is also destroying a lot of lives, with the way that these economic crashes play out. So it's it is
for
what
everyone
it is.
who is I'm sorry to interrupt, but for everyone who might be raising the eyebrows, the blood on the street is an expression. We don't mean that literally. It's an expression.
Oh yeah, I'm not...
when we means that when a lot of people are losing and they are hopeless, desperate, they're selling everything because companies are going bankrupt and all of that. Those are basically the best times to be an investor, buying, right? Not holding, but buying.
So looking at EU here now, I've had a long bias here because of this rounded price action here, and also the fact that we have that bullish candle on the daily right here. So from yesterday and from the beginning of this week, I've always looked at this and say, I have a long bias, but the reason why, you can see down here, your USD is in my no interest list. And the reason why it's in my no interest list is, even though this is exactly the type of rounded bottom and the type of price action that I want to see for me to buy, and I want to see this at the right levels, but this is not the right level, because this is not a rounded break and retest. So let me show you what I mean. This is resistance, right? And then we see price test resistance, breakout, retest. And what happens here in between, there needs to be like rounded price action. There needs to be time and space between the breakout and the retest. And if you look at this for your USD, yes, you have a breakout and you have a retest, but the retest is also part of the breakout. Like this breakout candle is part of that rounded price action. So it's immediate retest, which I don't really like. And I also don't like the fact that I would be buying at the top of this big vacuum. Space. Okay, yeah, space. Yeah. There's a lot of space between, like, this is the perfect retest area right here. So if I get this type of price action down here, then that would be a very good trade for me. So that's the reason why I didn't take that trade, because it was simply not perfect. But there is a lot to be said about the strength of what we're seeing from EU today, because this is a level, and we reclaim that level as support. And we now apparently also had news that supports this move to the upside, because we had news, then the US markets are opening, and now we're seeing US traders as well digesting the news and trading based on that. And this is what we're seeing. And this is the effect of that. So I think we are going to continue higher. So, and then if we're going to continue higher, we're going to be looking at levels of interest to take profit. And I think the immediate area is the area between these two wicks. Just connecting the high of that wick with the high of this wick creates a pretty good area for a possible take profit area. And the more I look at this, the more I look at this, the more interesting I get in actually taking a trade. Because what I'm seeing now is if I enter here and I view this as sort of a long-term trade, TP on that wick, and I can even have my, like, and I can have a very wide stop loss on this one. Like we're talking, 60 pip stop loss for a 30 pip move, just up to that level. So if this makes sense on the 4 hour, if this makes just perfect sense on the 4 hour, then maybe I have a trade here. And I'm just not feeling it. There's just something here. I don't know what it is, but there's something that's not right here. So yeah, for me, there's no trade here, but yeah, there's just something here that I'm not liking. But I'm definitely biased for EU to continue higher throughout the day.
Throughout today?
What about you?
Yes.
Yeah, throughout the day, yeah.
Okay. Well, this is what I, let me put on my screen, and I will not start explaining what I see on the monthly, but just the fact that, forget about that we are in a supply zone on the monthly here. But what I see is the most recent price action is we have formed a bullish order block. We went in to retest it and move out, and we're in that impulsive move that I typically want to catch. And what do I see? When we left when we formed that monthly, on the weekly, we came in, tapped into it. Look at that here. We tapped into it, and we closed as an outside bar on the weekly. That's very bullish, and it's doing it exactly on top of that monthly, right? So that's insightful information. That's the market telling me I am flexing my biceps because I want to make a move, a big move, right? That's the market boiling, making that boiling sound of a bullish move.
Flexing the muscle, biceps, and boiling. I like that.
And what does it do next? See this pattern? I talk about this all the time, and if to the point of perhaps boring people, but this is so intriguing and so easy, so fascinatingly simple. Market makes that move down on this candle, forms that engulfing, which to me means it forms this order block. What does it do next? It goes big in, touches that order block, and moves away, right? This hasn't closed yet, so I don't know what will happen. But as it is showing here, this is bullishness. That's the essence of bullishness, where price comes, forms what it wants to do, moves out and comes back, confirms to you that that's what it wants to do, and then moves in that direction. So on the weekly, this is, even though I know on the higher time frames we did have a pin bar, and we are at a weekly relevant area where we could be looking for reversal. The reversal is not presenting itself, right? That's information. As Saul was saying, he wants to see the market compressing as it is reaching that area of importance. And to me, market is not compressing. Market is not decelerating on these time frame. These candles are not getting smaller. I mean, the bearish one is, but I mean, the bullishness, they're not getting smaller. So just looking at analyzing those couple of bars within where the weekly order block we have above. Then we have the daily. And what do we see? The daily, of course, is going to show the same thing, just with more zoom in, with more granular look. But what we had is a huge move. I mean, that's the impulsive move that tells you who is in control. And it comes back, right? It does that's the same thing I just mentioned and moves out. And the fact is that after this move, if you see this, after this, let me get these out of the way a little bit, all the drawings. Very simple. Let's not complicate ourselves. What do we see? We see an impulsive move. And is the market able to retrace by a lot? No, not at all. That's bullishness. The market couldn't even, come back to that order block below, right? There is so much buying interest still in the market that it didn't retrace by a lot, right? In comparison to the whole movement. And then it forms that order block. And guess what? What does it do when it forms that order block? Look at that wick, right? Look at that wick. I'm going to take off everything, and you look at this order block that was formed, and look at wick where it comes right back into that order block and then shoots out. And if we go to the lower
order blocks like that is they I understand why so many people look at order blocks, because they're and like this is not even like the most perfect wick, but sometimes you get that, just absolutely perfect, and it happens so often. So I do really understand that why people are very interested in using order blocks, because very powerful as entry triggers.
I mean, just imagine what the advantages gives you if you have a specific area where it needs to come back before you enter, and where it needs to turn around from that point, right? If you have those two things, that's basically what I trade. I that's the idea behind how I trade. I wait for it to come to my area and then make that reversal, and I try to catch it as it moves out. All right, so that's the daily, right? Very clearly telling we are in a bullish market condition, and this doesn't even end here. Let's go to the 4 hour. I had these two lines yesterday, and that's exactly the area it came back to retest. So even on the lower time frame, it doesn't happen all the time that you have that alignment from the daily to the H4, but a lot of the times there is a way to do that. And those lines were based on the alignment I have on the H4, and if I'm not mistaken, on the H2. It's this order block, right? That was kept. It didn't give me the signal because I'm very specific with my signals. But it doesn't. The fact that it didn't have the signal doesn't mean that that area cannot still be used for as a trampoline, as a jumping board, or how do you call that? As you jump into, or not jump in. I'm thinking Olympics. No, as you move out of the area. So and that's basically, if you see, this is what I see. Right, we have a. And this is a reversal, right? And this is, I think this is crucial. Look at this. We have a downtrend on the H4, right? We're coming from above. We make this high. We have that impulsive move down. And you think, okay, it's going to make a lower high because that's what it's been doing, right? And it's going to continue down. But what does it do? If that is going to be true, it shouldn't be respecting bullish order block, right? It forms two next to each other, and it was never able to break that. That is the story to me. That's the narrative. That the story is, it has changed in the structures it is respecting, right? And that's another expression of who is in charge. The sellers were no longer in charge. It's the buyers who became in charge as it was consolidating here, given that the bullish structures were being respected. And as it was respected, it went up, and it went into an area where it should, and this pin bar could have tricked you. But eventually you could see how it is making higher highs and coming back into that area as it is moving out. I think this is, even though it didn't trigger me, this is technically very, very clean movement in terms of what it wants to do, right? It changed from a a downtrend into impulsive move. This is just the beginning, and my system didn't signal me, but that doesn't matter. The fact is, the narrative and having that narrative and seeing how it happens gives you that confidence that, okay, I think I have a good idea where it wants to go, even though it didn't signal me, so I couldn't get in. You could think, okay, maybe I should have another way to trigger me in, or have a secondary alternative way to catch these kind of move. And of course, I'm always trying to improve my trading, but I'm not there yet. So my signal didn't get me in. I didn't pull the trigger. Yeah, that's I think is very, very clean to me. And when it breaks this, and since we have on the let me see, on the H4, I don't see a neckline. On the H2, this becomes the neckline, so it breaks it and it goes away. I don't have an idea where it could be going. Of course, on the H4, I don't have a structure, a bearish structure either, in this top where I would say where it's going to stop. So yeah, I don't have an idea here. Basically, if you got in here, you take your profits. Depending on the time frame you want to be holding that, either on the next structures, either these, or based on the ATR, based on the weekly range, because that's typically what it does in a specific period. So yeah, I don't have any idea where it's going to decelerate. What I can say is this, as a rule of thumb, if everything else remains equal, right? This move this is interesting. This move that created this impulse, and that order block that was created in the last impulse, you can use that to gauge, the power and the potential of price going much further. And one of very basic way to get project an area where it could reach, right? Have a good chance of reaching, is taking 2 times the ATR. So you need to take ATR and you hover over this candle, the one that formed that engulfing, right? That candle, you hover over it with your ATR, which will be down below, and you multiply that by 2. So that's 100. Let me see, that's 18.4. You multiply by 2, that's 36.8, and you add that to the lowest point of these two candles. It's very rudimentary. It's not very sophisticated, but it gives you a rough idea. Right, 36.8, rough idea where to put your TP if you don't have anything. Right, it's a very simple rule that I use when I don't have any reference point to the left. In this case, it resonate. It has it combines well with this structure. So that could be one area to put your stop, which makes sense based on the price action that it showed us.
All right, guys. You have anything else you want us to cover? Let us know in the comments, and we will take a look.
I'll check another thing though before we continue. The ATR for today is around between 56 and 41, and I would take the average of that, which would put it around 49, let's say 49.50. And if you measure that on the daily, you can get an idea of what is 100% for today. What's the range? What is the expectation for today? We measure that. Let me get everything out. We measure that. That gives a 59, I said, right? No, I said 49, around 50. So we are already pushing the limits actually of today's range. If today is an average day, and it's not a big day in terms of FOMC or interest rate, something like that. We did have a red folder news, but I wouldn't, if I don't want to have trades on for overnight, I don't want to be stretching it and expecting having a target that far. So I would probably then be a little more conservative with my TP and just target the very next area, which is, I think, something related to these structures right here, which we already hit. So basically, I would be ready to take off the trade.
I think actually what we can do for the last 5 minutes is take a quick explanation of what an outside bar is, and I think this is one of your specialities. And so we got a question here saying, like, please also tell us what you consider an outside bar.
All right. However, yesterday a 5 minute wasn't enough, and I think today it isn't enough either.
Yeah, that's actually true. Maybe we should probably talk about that tomorrow then, because I did actually have a plan on talking about that today, but I completely forgot about it. So I will make a little note here. Outside bar tomorrow.
Yeah, I think it's a great topic because we can see it from different perspectives, not only on the chart, but also I go deeper into the psychology of traders, the participants, market participants, as the bar is forming, and try to put ourselves, as I'm explaining it, what you would be feeling if you are on this side, and what you would be feeling if you're on the other side. And if you do that little mental experiment, you can understand what would be logical to expect, or what would be the reaction an outside buy would have, and why. But I think it's a great thing. We 5 minutes is really not enough. I think we should give it some more time than 5 minutes.
Definitely, we'll do that. But I think that's a good way to end the live stream. We've done almost 2 hours now. It's been was great having Saul on, talk about his way of trading, and tomorrow we're going to be focusing on gold again. We're going to be doing some gold trading, which is going to be interesting because today obviously we have a lot of volatility, and we might actually see gold breaking out. It looks like it wants to break out, and if it can break out, then tomorrow might actually bring a lot of interesting opportunities on gold. So we're kind of challenging ourselves, because we're not really trading gold actively in our personal accounts, but we want to challenge ourselves for the live stream here and the trade. That's a crazy move right there.
Yeah, the way it is getting into that area, which I said would be a great area to be, that H4, and more specifically that H1, which would be a great area to be entering that possible sell against the trend. The way it's getting into that area is, relevant. Clearly who is in control if it closes like this. And it's going to close. This is the H1 in 1 minute and 29 seconds. So it's likely to close like this. And if it does close like this, we know who is in control and who will decide what's going to happen, probably going to the direction we're going to go next.
Yeah. No, absolutely. It's going to be very interesting to see what price action does tomorrow, and we'll see if we can trade that. All right, guys. So thank you all for joining, and of course, if you like this live stream, make sure that you do hit that like button and subscribe to the channel, like I've already promised. When we do hit that 45K subscription subscribers mark, we will do a giveaway, and I got big plans for 50K. We're not too far away from 50K subscribers, and I'm thinking we'll have sort of like a big event for the whole week. We can bring on guests every day. We'll try to bring on guests that really does have something to share, real professional traders that has specific trading systems that they can share with you, and tips and tricks on how to really become better in trading. But that's for later. Next milestone is 45K, and we're I mean, I believe we were at like 25 when we started this, so we're really nice. It's very obvious that you guys are liking what we're doing here. So yeah, let's make sure to continue showing your support, continue hitting that like button, and engaging in the comments like you always do. Very appreciate it a lot, you guys being here.
Thank you all for your attention. Yeah, we will be seeing each other tomorrow again. We'll be analyzing. I'll be talking about outside bar, so you better not miss it. And let's trade carefully today and to survive another day. See you tomorrow.
Yeah, that's great. All right, guys, take care.
Hi guys, so thank you very much for watching the video. Now make sure you like and subscribe, and most of all, go into the YouTube and check our other content that we provide here at The 5ers.